for joining our webinar. Thank you for joining our webinar today to learn a little bit more about the CARES program, particularly two programs specifically, the Paycheck Protection Program and the Economic Injury Disaster Loan Program. And so without further ado, we have with us two people today, David Hincapie from the Small Business Administration, who administers these loans, and we can tell, or administers at least the EIDLs, and he knows all about the PPP loans as well. And then also to answer some questions after the presentation, we have Alison Rind, who is an expert and attorney in commercial lending from Lerch Early Brewer. So David, I'm going to turn it over to you, and you have a presentation for us. And by the way, if you have questions during the presentation, please ask them using the chat function on this, and we will keep you muted to monitor or to keep down the noise throughout the course of the conversation. So David, the floor is yours.
Okay, thank you very much. Hello, everyone. I'm going to turn on the share here so we can just start with the current version of the presentation we have now. Share screen, there, and I'll make this a slideshow. Okay, slideshow. All right, can everybody see it as a slideshow? Cool. All right, so my name is David Hincapie. I'm here to talk about the financial tools and resources to help small businesses that the SBA has. There's two programs. You're going to hear a lot of repetition from me. I'm going to say things 4 or 5 times over and over again because I know that you're under a lot of stress. And as one of my professors used to say, your attention tends to drop when you're under a lot of stress, so you can miss things. So let's go to the first thing here. On the left, the administrator is Jovita Carranza, and she's only been on the job about 2.5, 3 months, and then this hit. So she made a few changes on her own authority to the Economic Injury Disaster Loans, EIDL or EIDL, Economic Injury Disaster Loans. And we were working with that, that's a program that existed before this pandemic, long before it. And she's also in charge of implementing the PPP. On the right is our district director, Antonio Doss, and he is our point of contact with the more senior people in the administration regarding changes that comes with these programs. And we just had a meeting with him today, so we got some up-to-date information. All right, we're going to talk about 7 things. Here it is. Using loan payments is payment deferrals to augment cash flow, the CARES Act, PPP, everybody wants to know about it. The EIDL program, you should know about that one too. The CARES Act, small business debt relief, the bridge loans, application support, and then some coaching and mentoring for business owners in these difficult times. First thing. So federal, state, and banking regulatory agencies have issued a joint letter to financial institutions strongly recommending them to work with borrowers to offer loan modifications. So any loan modifications that they make, I think is not going to affect them negatively with their regulators. Because if a lender has too many loans in a non-accrual status, that is, they're not getting regular payments on the loans, the regulators start looking very closely at the quality of their portfolio, and they can suffer some kind of regulatory enforcement action. So this is not going to happen, right? Because if they're going to defer loans on a lot of their borrowers, they're not going to be accruing the payments, et cetera. And it won't reflect negatively on the borrower's credit score. So if you get these, then it won't be negative for you. Now, existing SBA loans, if you have an SBA loan, the loan payments are going to be deferred up to 6 months, or can be deferred up to 6 months. Talk to your lender if it's a 7A loan, a 504 loan, or a micro loan. If you have an existing disaster assistance loan, if you already had one, since that's a direct loan to us, from us, we're automatically deferring payments on all disaster loans that exist right now, not the new ones for the disaster, but any ones that you had before until December 31st of this year. And as I said, non-SBA loans, you can go to your borrowers or your lenders and ask them for some kind of loan modification or deferment on payment. All right, now this is the big one everybody wants to talk about, Paycheck Protection Program. This is from the CARES Act that passed just over a week ago. These are not direct loans from the SBA. They're different than the EIDL program. The loan is processed through banks and financial institutions. The ones that you want to go to first are the ones that are existing SBA preferred lending partners, the ones who are already doing 7A loans and 504 loans. We're doing a 100% guarantee to lenders. That's very unusual because the highest guarantee we do is 90%. And most of them are even less than that. It's a 100% guarantee to the lenders. Existing SBA lenders will provide these loans, and we are going to increase the number of lenders who are eligible to do these loans. There's an expedited process for new lenders, for banks or for institutions to become new lenders. And they will not charge loan fees for PPP loans. All right, eligible entities: businesses, sole proprietorships, self-employed individuals, and independent contractors, nonprofits, veterans organizations, and tribal concerns. You have to have fewer than 500 employees or be within SBA small size standards. The loan amount is up to 10 million. The interest rate is 1%. Loan forgiveness is tied to the use of funds for payroll costs. I'll get into details about that. So up to 100% of the loan is forgivable. Loan fees: none. Collateral: none required. No personal guarantees. The maturity is 2 years, a 2-year term. The first payment is not required for 6 months. So the first payment is deferred for 6 months. You apply through any existing SBA 7A lender or preferred lending partner, or through any federally insured depository institution, including a credit union or farm credit system institution. Other regulated lenders will be available to make these loans once they are approved and enrolled in the program. As I said, we have an expedited process to get them enrolled and approved. All loans will have the same terms regardless of lender or borrower. A list of participating lenders as well as additional information can be found at sba.gov. Look in the coronavirus COVID-19 section, the banner up at the top of the web page. Click on that, and then that's where we've collected all our information about all the programs related to this. Now, already we have discovered, it's starting in December, that many lenders are only doing these for their current customers. So you should go to your bank or lender where you have your business accounts, business checking account or whatever else you have. Go there first. We have already encountered that many small businesses have them with smaller institutions, either small community banks or credit unions, who are not SBA lenders. So if the institution wishes to become one, they can go and you can ask them if they're going to do it or not. I don't have an answer right now. We don't yet know what to do about businesses whose current bank doesn't want to do the PPP. I don't know what to tell you. We have to find institutions, and so we had a meeting this morning to collect information on the banks in our district, the Washington Metro Area District Office, and find out which lenders are willing to do them for non-customers. But right now, you should go to yours first. If they are a 7A lender or a preferred lending partner, apply with them. If they are not and they don't want to be, stand by. We're going to try to find which lenders in the area are willing to do these loans for non-customers. Now this one, economic injury disaster loan, which not as many people are talking about, but I think it's equally important, and I think it's just as good and depending on your circumstances might be better. So this is a program that existed long before this pandemic. All right, you have to be an SBA small business according to the SBA size standards, and that link right there, sba.gov/size, that's where you can find the size standards for your NAICS code, North American Industry Classification System. Every kind of business has up to a 6-digit code saying that's the industry that it is, that's the sector that it's in. So small agricultural cooperatives and aquaculture businesses also qualify. and private nonprofit organizations, and they have no size standard. They can be of any size. Private nonprofit just means a nonprofit that is not a government nonprofit. What's a government nonprofit? A state or county hospital, a city or state college or university, or any other kind of institution that's nonprofit, but that's part of a government. That's a government nonprofit. This is for private nonprofits. So these are the organizations that are not eligible for an EIDL. Religious organizations, charitable organizations, gambling concerns. These are businesses that derive more than 1/3 of their annual revenue, gross revenue, from legal gambling activities. Yes, even if they are legal gambling activities, if more than 1/3 of their annual gross revenue is from that, they don't qualify, they're a gambling concern. Note, religious organizations do qualify for the PPP. They've not made a change to this one. Religious organizations do not qualify for this one. How much can you borrow? You can borrow up to $2 million. That's the maximum possible loan. But doesn't mean you're going to get that. I'll tell you in a moment how we're going to calculate what the loan will be. Up to $10,000 is a loan advance that will be forgiven. So up to $10,000. It's $1,000 per employee. You're going to get in a loan advance. Once you finish the application and you check the box that you want the loan advance, you should be getting it in about 5 or 6 days. You know, you're going to put your checking account and routing number and everything in there so we could send it to you. Up to 10,000. It's 1,000 per employee, a cap of 10 employees. Interest rates are 3.75% for small businesses, 2.75% for nonprofits. Terms of up to 30 years are available, and the first payment will be due 12 months after the loan is issued. So the first payment is deferred for 12 months. The interest does accrue, but the first payment is deferred for 12 months. The terms are up to 30 years. It could be 25, 27, 23, 24, but it's up to 30 years. It's designed to be a loan that's relatively easy to pay back, especially with that small interest rate and a long term. You can prepay it also. You know, if we get through this and open back up for business in August or September, and things go well, and you can pay this back early. It doesn't matter. And it is a direct loan from us, from the SBA. So you apply on our website. I'll get to that in a minute. How can you use the EIDL funds? They're working capital loans for 6 months of working capital. 6 months of working capital. You can use it to pay fixed debts, payroll, accounts payable, and other bills that could have been paid if the disaster had not occurred. Notice it's payroll. The PPP is also payroll. This existed before the PPP. That's why it includes payroll. You can apply for both. That way you can use the PPP for payroll and then use this for fixed debts, accounts payable, other bills that could have been paid. Now, the intent is to help you stay afloat, pay these fixed costs and expenses so that you can stay solvent as a business until the emergency is over and you can restart our operations quickly. They are not for business expansion. If you were planning on hiring new people, it's not for that. If you were planning on buying new capital equipment, plant and equipment, it's not for that. It's for the things in the first bullet point: fixed debts, payroll, accounts payable, and other bills. General loan approval criteria. First thing is we're going to look at the credit history of the business owner. It's got to be acceptable to the SBA. It doesn't have to be super high. We don't have a fixed number because immediately the next thing we're going to look at is the repayment ability. We are going to look at 12 months of your financial performance before the emergency. Not now, because obviously now your revenues are down. We're going to look at your financial performance under normal circumstances 12 months before the emergency. Looking at that repayment ability, we're going to calculate 6 months of working capital, and that will be the loan amount. You do not request a specific amount. We will calculate the amount, and that's what we're going to offer. Eligibility. We really don't need this section here because every part of the United States is eligible. This used to be a county by county program where if you had a tornado somewhere in Tornado Alley, Kansas or Oklahoma or something, the governor would declare, would ask the SBA for a declaration, emergency here and the surrounding counties, and now businesses there are eligible for the EIDL. That's not the case anymore. Now it's every county in the United States and in U.S. territories. Collateral. There's no collateral requirements. In fact, for loans under 25 or 25,000 and under, we wouldn't take collateral. We're just going to make the loan because these are cash flow based loans. It's based on the cash flow of your business before the emergency. Now, when it's over $25,000, we will take collateral when it is available. We will not decline a loan for lack of collateral, but whatever you do have available, we require you to pledge as collateral. We won't decline a loan if you don't have collateral. But if you do have something, we require you to pledge it. Okay. Now, EIDLs. Unlike 7A and 504, they are not initiated through banks or like the PPP. They are issued by SBA directly. You do not go to a financial institution for the EIDL. You complete the application at sba.gov. Click on the top banner. It's in yellow. COVID-19 coronavirus programs. Look for Economic Injury Disaster Loan Advance Program. All right, the debt relief program. This is immediate relief to small businesses with non-disaster loans, in particular 7A and 504 and micro loans. For the first 6 months, the SBA will cover all loan payments on these loans, including principal, interest, and fees, for 6 months. The SBA will cover all loan payments on these loans, including principal, interest, and fees, if you have a 7A, 504, or micro loan. This relief is also available to new borrowers who take out loans by September 27, 2020. Express bridge loans. If you currently have a business relationship with an SBA Express lender, if you currently have an SBA Express loan, you can get up to $25,000 with less paperwork. It can be used as short-term funding to bridge the gap while you're waiting for the loan decision on your EIDL, okay? Or you can use it as a term loan. Now, the EIDL loan decision is gonna take about 28 days. It used to be 21 days, but we have too many applications now. It's gonna be about 28 days. So in the meantime, if you have an Express loan, you can get the Express bridge loan. Okay, loan application support. This number, write it down. It is now open 24/7, 24 hours a day, 7 days a week. This number is available, customer service. I'm not kidding when I say, stay up. Make your phone call at 1 in the morning. It'll be better. Email, disastercustomerservice@sba.gov. They are also good. One piece of advice, if you send a question by email, make it easy for the reader to understand your question. I don't want to hurt anyone's feelings, but full sentences, punctuation, I'm not kidding. I've seen some of the emails that come into this line. I don't know how people think we're going to help them and answer their questions if we can't understand what they're saying to us. Be specific, be clear, refer to exactly what you need to know, send the email. They will be able to answer your question. Remember, this is a customer service email line for the whole country. This is happening in every SBA district office, every county, every state. So the better you make your question, the more precise, the more clear you make it, the more quickly they can answer your question. Okay, deaf and hard of hearing customers can contact 800-877-8339. Now, you can also reach out to the network of resource partners, which means the small business development centers, the women's business centers, the veterans business outreach centers, and the SCORE mentors for help and coaching on how you might want coaching when you get this loan. You might want coaching on the best way to use it. Now, you're probably not going to get a lot of one-on-one because they're swamped. I know that the SBDCs and the WBCs and the SCORE mentors in our district office are doing webinars like this specifically for business owners on how to manage this. So get in touch with them, sign up for one of theirs. They're going to give you help with, once you get the loan, how to use the money, how best to use the money. Here they are. For SCORE, WashingtonDC.SCORE.org. That's the SCORE chapter in this area. SBDCs, we have the DC SBDC, the Maryland SBDC, and the Virginia SBDC. The Women's Business Center, same thing. DC WBC, Maryland WBC, and for Virginia, you want CBP Online, which is Community Business Partnership, or you can just search for Women's Business Center, Virginia, you'll find them. Veterans Business Outreach Center, we have one in Springfield. So if you're a veteran or a dependent of a veteran or a spouse, then you can go to them as well. Now, let's move this over here. Okay, so to stay up to date, go to that in the second paragraph there, sba.gov/updates. Put in your zip code. Then you'll be on our email list, and whatever updates we have, whatever news we have, you're going to get it to your email. For detailed, and on Twitter, you also have @SBA_DC Metro for real-time updates and program notices. For detailed information on all programs, there's the website. But you don't even have to memorize this. Go to sba.gov, click at the top banner, the yellow banner, like a caution tape. Click on there, and you're going to find everything. Okay, that's it. I'm going to stop the share now, and we can go to questions if anyone has questions. I'm sure you do. Looks like we lost Jane.
Jane is now unmuted. Okay. Okay, so the first question we have, the first question we have is, once the EIDL program application is submitted, how long before any response is provided? This is from someone who submitted one last week. We didn't receive an email confirmation or any response of any kind.
I wish I had a ruler like the nuns when I was a kid. Someone was not listening. 28 days for a loan decision. Okay. 28 days at least for a loan decision. 28 days for a loan decision, because we're getting applications from around the country. Now, when you submit your application, you're going to have a loan application number immediately right there. That is the number that you will use when you call the customer service line to get some sort of update. I can't hear it. It's on mute.
Sorry. Can a sole proprietor with employees include the owner's draw in the total payroll costs when you're applying for a PPP?
Okay, sole proprietors. When you say employees, are we talking about, okay, I won't go back and forth with you. If you're a sole proprietor and you have actual employees, you have W-2 employees, not contractors, W-2 employees, you can use that for that. You can use whatever it is you're paying yourself. So yes, the owner's draw is in there for sole proprietors for the PPP, not for the EIDL. The EIDL is a working capital loan for your fixed costs. It's a little different, but for the PPP, yes.
Thank you. I have a real estate company that owns many apartment buildings and uses another company to manage the properties. Management company assign employees on site. My company reimburses them for the cost of these employees. Is my real estate company eligible for the paycheck reimbursement?
Jane, there's some weird echo, something going on with your sound, and I didn't quite get that. There's a real estate company, somebody's paying something to do something.
It's a real estate company that uses, can you hear me now better?
Yeah,
No.
it's very muffled.
It's muffled, and if you have earbuds, that would be that would be better. Okay.
Okay. Let me see whether if I forward this to Courtney, she can help.
Okay.
Jane, I've got it. Let me find that question.
It's from Lulu.
The question was, I have a real estate company that owns many apartment buildings that uses another company to manage the properties. The management company assigns employees on site. My company reimburses them for the cost of those employees. Is my real estate company eligible for paycheck reimbursement?
Always exceptions, testing rules. Okay, if we go back to the interim final rule, it's for employees of your company. Are they W-2 employees of your company? Yes or no? Yes? Yes, you can use it for that. No? No, you can't use it for that. But I'll submit this question up the chain. I'll see what people say. I would plan for no, because right here in the 31-page rule that I printed out and I've been reading all weekend and answering questions about all weekend, and we've been talking about all weekend, it's for employees. Employees means W-2.
David, can I follow up on that question?
Yeah.
So what about that management company that actually employs these people to service these buildings and they happen to be W-2 employees? Could that management company apply for the PPP loan?
Oh, yes. The management company, if they have their own employees, yes, they can do it. Yeah. So there's that.
Okay, thank you. I'm going to read another one.
Mm-hmm.
Let's see. So this is from a business owner. I'm filling out my application that is up on my bank's website, and I put my 2019 income as payroll. IT says I'm eligible for, there's a specific amount listed that I'm not going to read. Then I have to put in my payroll for the next 8 weeks, rent, utilities, and mortgage interest. Do I divide my yearly income by 12 and put in 2 months of that income under payroll, then put my mortgage amount under rent since I work from home?
I'm not even going to try to remember all that. Send me an email.
Okay.
Yeah. And this is for the PPP?
It does not.
Yes, it's for the PPP.
It's for the PPP. Yeah. Okay.
Okay. And I have another one. Are contract employees not eligible, i.e. W-9s?
For what?
W-9?
For what? Eligible for which loan?
It does not say, so I am not sure. Oh, for either.
For either. Okay. Contractors can get their own EIDL. Right? So this is for payroll. So if it's the EIDL, it's for payroll. Payroll is not contractors. I know everybody wants it to be, but it's not. Payroll is people who are regular employees, W-2 employees. It's for that. But your contractors can get their own EIDL. And your self-employed people can also get their own PPP. So you don't have to worry about that. They can go get their own.
Thank you. And this question is for PPP. Would car allowances paid as compensation to certain employees be included in compensation?
It doesn't say it specifically there in what the use of funds are. Here, PPP loans are to be used for payroll costs as defined in the Act in Section 2F. Costs related to the continuation of group health care benefits during periods of paid sick, medical, or family leave, and insurance premiums. Mortgage interest payments, but not mortgage prepayments or principal payments. Rent payments, utility payments, interest payments on any other debt obligations that were incurred before February 15. You can all read this. You can all download this rule. It's right there on the website. Refinancing, you can use it for refinancing an SBA EIDL loan made between January 31st, 2020 and April 3rd, 2020. If you received an SBA EIDL loan from January 31st to April 3rd, you can apply for a PPP loan. If your EIDL loan was not used for payroll costs, it does not affect your eligibility for a PPP loan. Now, car allowance is not in there. There's even a definition of what are payroll costs, not just it's salaries, wages, commissions, cash tips, but there's a couple of other things.
All right, thank you. Next question. If I'm paying someone by 1099 right now, should I switch to W-2? For March.
I don't know. If they're a 1099, they can qualify for their own EIDL.
Mm-hmm.
Right? So if what you're trying to do is you're trying to keep this person paid, right? Which is good. But if they're not eligible because they're a 1099 employee or contractor, then they can get their own EIDL, and they should. They should go and apply for it.
Yeah, and as far as I know, there are certain restrictions on what makes a 1099 employee versus a W-2 employee. It has to do with the nature of the work that they perform. So
right.
I think that would affect it as well.
Right. I mean, so I'm not saying anybody's doing anything, but if all of a sudden you're discovering that your 1099 employees are actually not really independent contractors because you're telling them where they have to go to work and when they have to show up and what they have to do and everything like that, they're in fact W-2 employees, and you were just sort of fudging on it a little bit, you're about to discover that right now.
All right, next question.
I'm a cynic.
Regarding the loan amount for PPP, how does it work with calculating federal and state taxes into the loan amount?
For the PPP. It's in here. The way to calculate what the PPP loan is right in there. Updates on, because this question might come up, on what's going to be required to, what the banks are going to ask you for the PPP in their underwriting to prove your payroll. Just use your 941 or your 941, 944. Allison, you'll know this. Right?
I'm not a tax lawyer, but
but I know you know, right? It's the form with your quarterly taxes or your annual payroll taxes, right? And so,
right. I mean, whatever number that is, that's correct.
Yeah, right. So that one, if you don't know it, then your accountant knows
right.
it.
The CFO should know that.
Yeah. So they're going to know that, and that's how you're going to prove, based on the number of the taxes you're paying, how many employees you have.
And David, just to follow up on that question, so federal taxes are excluded from that calculation, though?
State and county taxes assessed on compensation are included.
Correct.
Yeah.
All right, and this is the last question I have right now. If you get paid from two separate entities, can your pay from each entity be included in the payroll calculation for each company for the PPP? Are there any total wage limits?
Yeah, the cap on wages is $100,000 annual compensation. Okay. Now, if you get paid, this loan is made to a company so it can pay payroll. So if you're saying if you get paid, meaning me, then I'm an employee, so I don't understand the question. Are they saying if they pay, is it like a business owner that has two entities that pays Courtney, right? Does Courtney get paid from two different entities that I own? And so what do I do? Is that what they're asking? I'm not sure.
I would love the asker of that question to clarify for me. I'll ask a different question and we can come back to that one. How long will it take for applicants for a PPP loan to hear whether they have been approved for a PPP loan?
That's entirely up to how fast the bank can process the application. Now, let me give you a little bit of inside baseball of this. The bank is going to take the application, going to do the underwriting. The underwriting is really easy. It's supposed to be streamlined. We want to get the money out there. Okay. Right now, what they're using is the system that we have for banks to input information when they do a 7A loan or a 504 loan. Because banks aren't doing 10 of these a week, it's a cumbersome system. I mean, it could handle the volume that we did in the normal circumstances. If you're really fast, it could take you an hour to put it in. So the bank now has, say, 500 applications. That has to get put into our system. We are working, one of the things we talked about in our meetings this morning was, what are we going to do to speed this system up? Right now, we're stuck with what we had before. It is slow. So how fast it takes from the time you put in your application with your bank to the time it gets funded, I don't know. I really honestly do not know. It's all on the resources of the bank and how fast they can process these applications, get them in, get the funding.
All right. And to follow up on the previous question, it is a business owner that's getting paid from two entities. And should the pay from each entity be included in the payroll calculation for each company?
Still not sure. If the business owner is getting paid, so does that mean I'm an employee of the SBA, but I'm also a business owner? So why am I applying to the PPP? Because I'm a business owner and my employees, or am I using the PPP to replace my salary from the SBA because they put me on? Like, what are they asking? I'm not even sure.
I'm not sure either.
Yeah, I know.
Go back to another question. What date is the head count determined as of for the PPP? So what? So
the head count. Oh, the head count. February. What is it? As of February. Let's see here. Because there's some differences between this and EIDL. You're eligible if you operate under a sole proprietor, and if you were in operation February 15th, 2020.
Okay.
So head count then. It doesn't say specifically head count then, but that's when you become eligible. So let's make the reasonable assumption that that's what it is.
Okay. And if you're a landlord and you're giving relief to your tenants, can you apply for a loan?
Does the landlord have employees, I guess, right?
Yeah. Yeah. I mean, is it a landlord that owns an apartment building and they're providing loan relief? Okay, that's great, wonderful, or rent relief. But
this would be for a commercial.
Sorry,
not apartment, a commercial property, not an apartment.
A commercial property. Okay, do they have employees? The PPP is for employees.
Okay.
Yeah, it's
now,
right.
Go on, Alison.
I was going to say it's not to cover you for. You can't use that loan to cover you because you're not taking in the rent.
Yeah.
But if you have employees that you need to pay, but now you're not taking in rent, so you're not getting all that income, you can get this loan to pay your employees and to cover your own mortgage interest, rent payments on what you may be paying rent or mortgage on.
Yeah. Yeah. And remember the EIDL. Everybody's paying attention to this PPP and they're not paying attention to this EIDL, because in the PPP, all they hear is forgiveness, 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 100% forgiven. That's a good provision. That's really great. But the PPP doesn't cover your fixed costs. It's for payroll and the interest and some things like that. But the PPP, for example, is not for accounts payable that you have. The PPP is not for notes payable that you have. other loans. Not, let's forget a mortgage for the business, but suppose you have a note payable for a couple of vehicles for your business. The PPP is not for that.
Right.
So pay attention to the EIDL as well.
Right. And David, I would assume then, because passive businesses are not eligible for 7A loans in general.
Mm-hmm.
So if you're just an owner of real estate, you wouldn't be eligible for a 7A loan. So wouldn't that apply?
Yeah, because it is an expansion of the 7A program.
Is the FTE calculation based on 30 hours a week or 40 hours a week?
40 hours a week. Well, it tells you exactly what it is, what the formula is here. Where's the formula? The following methodology. It's taking annual payroll costs.
Okay.
So it's not looking at weekly, 40 hours per week or anything like that. It's taking annual.
Okay. And the document that you're referencing with the details, can you tell us the name of that document again? We know it's on the SBA website, but the actual name of the document.
The interim final rule. And it is on the, let me go to the web page. I will show you what the web page looks like.
Okay.
So you're going to get, I'm going to share this screen with you for a minute. You're going to get to the Paycheck Protection Program. Let me find it, share screen. You're going to go, see, when you go to sba.gov, you're going to find this yellow banner here. Click here. You're going to find your way to this page, Paycheck Protection Program, Lender Forms and Guidance, Interim Final Rule. There it is. Download it. Paycheck Protection Program, Interim Final Rule. It's all right there. All right, let me stop the share. Okay.
All right, that was really helpful. Thank you. Let's see. I don't have any other questions at the moment. If anyone has any last questions, please send them to me right now. Otherwise, I'm going to pass it back to Jane.
And I'm going to try to unmute myself. And am I garbled, or hopefully I'm
You're not garbled anymore. There you go.
Really good now.
I'll stay as far away. And I'm going to get myself an external microphone. But anyway, thank you very much, David and Allison, for joining us today. I think this was extraordinarily helpful. Thank you to all the chamber members. A video recording of this will be available, but as David mentioned earlier, and I was mistaken in the email that I sent to you all, we are not able to share the slides with you because they are changing day by day, hourly sometimes. And we don't want to give you wrong information on a set of slides. So the best source of information, as David said earlier, is the SBA website, and he just showed you how to get there. So again, thank you, David, very much. I know you're doing a lot of these, and you guys are doing yeoman's work. And thank you, Allison. I know you're very busy as well. And thank you, everybody. Everybody, please stay safe. And yes, David.
Courtney, Jane, just remember to give my email address to the person who had that sort of complicated question there, and then we can just talk individually.
No problem. No problem. Thank you again, everybody. Have a great rest of your day.
Thank you.
All right. Bye-bye.
Bye.
Thank you. Okay, I have another Zoom meeting now.